Namaskar, this is Dr. Dilip Satbhai and we are going to have an interaction on major changes in income tax return form number 3 for the assessment year 25-26. All are aware that the Central Board of Direct Taxes CBDT via notification number 41/2025 dated April 30th, 2025 has released income tax return form number 3 for the assessment year 25-26. The due date for filing this form is July 31st, 2025 for taxpayer not subject to audit and October 31st, 2025 for those liable for audit. This form is applicable to individuals and Hindu undivided families having income from business or profession, and it includes income from salary, house property, capital gains and other sources. Compared to other ITR forms, this one is significantly more detailed form. Some of the key changes introduced in this year are as under. First change, capital gains segregation before after July 23, 2024. Based on the provisions of Budget 2024, taxpayers must now bifurcate capital gains into those earned before July 23, 24 and those earned after. Accordingly, different tax rates will apply based on the holding period and the timing of gains. This change aims to simplify capital gains calculation and ensure proper tax compliance in the light of the newly defined timeliness introduced in the budget. The second important change is on capital loss on share buybacks. Effective from October 1st, 2024, capital loss from share buybacks will be allowed only if dividend income from such shares has been reported under income from other sources. This important clarification provides better transparency in treatment of buybacks related to capital losses. The third important change that has been brought is disclosure of assets and liabilities. The threshold limit, which was mandatory for disclosure of assets and liabilities in ITR Form 3, has been raised from rupees 50 lakhs to rupees 1 crore. Therefore, taxpayers with income exceeding rupees 1 crore must provide detailed disclosures of their assets and liabilities. The goal is to enhance transparency and ease compliance for high income individuals. The fourth important change that has been brought is about the cruise business now, which has been brought under presumptive income. As per section 44BBC introduced in the budget of 2024, cruise operators are now subject to presumptive taxation. For non-resident cruise operators, 20% of gross receipt from passenger transportation now will be considered as taxable income. This provision has been integrated into the ITR Form 3 to provide clarity to such operators and help them better understand the applicable tax framework. The fifth important change that has been brought in this particular return of income is about detailed information for deductions to be claimed. More comprehensive information now must be provided for claiming deductions under either Section 80C, Section 1013A and other internal deductions. Taxpayers will need to submit detailed disclosures to ensure eligibility and avoid errors, thereby reducing discrepancies and improving the accuracy and compliance of deductions claims. The last important change that has been made in ITR-3 is pertaining to the TDS Code Reporting. A new requirement mandates taxpayer to report the TDS section code in the TDS schedule of the ITR-3 form. This will improve traceability of tax deducted at source and make reconciliation easier for both taxpayers and tax authorities. Additionally, the relevant section of the Income Tax Act must also be cited for any deduction claimed against income or investment is now the new requirement. So these are the major 6 changes which have been made in ITR-3 form for the assessment year 25-26. If you like this particular video, please like it, share it, and ensure to subscribe to my YouTube channel. Thank you.